Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets buried in corporate filings, and today we're diving into a company that seems busy raising money, and not just a little bit. Before we get into the nitty gritty, if you love getting clear, no. Nonsense insights from these dense financial documents you see companies file, do me a favor and hit that subscribe button. Also, we have a fantastic community over on Discord where we break down these filings together, so definitely check that out. The link is in the description below. Today, we're looking at Cogent Biosciences Incorporated, and it seems like on the 11th of November 2025, they decided it was a good time to go out and get some extra cash from investors. So what did they do? Well, they entered into what is called an underwriting agreement, basically a deal with some big financial players like JP Morgan Securities LLC, Jefferies LLC, Leerink Partners LLC, and Guggenheim Securities LLC, who are acting as representatives for a group of what they call equity underwriters. Think of them as the middlemen who help sell the company's stock to the public. What they agreed to do was issue and sell a whopping 9,677,420 shares of their common stock, and they set a price for this $31 per share. This whole event they're calling the equity offering, but that is not all. They also gave these underwriters an option, like a bonus ticket, that allowed them to buy even more shares, up to an additional 1451613 shares, within 30 days. And guess what? The underwriters fully exercised this option on the 12th of November 2025. So they basically bought all those extra shares too. Now, let's talk about the money. After all the fees and expenses, they were expecting to rake in about $324.0 million from this stock sale. That is a significant chunk of change. How did they sell these shares? They used a pre-filed document called an automatic shelf registration statement, which had the file number 333 to 291,384. This is a way for companies to register a lot of stock at once that they might sell over time. They also filed a final prospectus supplement, which is basically a detailed description of the entire offering, confirming all these details. This whole stock sale was expected to wrap up on the 13th of November 2025, assuming everything went according to plan, which it seems to have done. What is interesting too is what the company promised in this agreement. They agreed to protect the underwriters from certain legal problems, including any issues that might arise under the Securities Act of 1933. Basically, if something goes wrong legally with the shares they sold, Cogent Biosciences is on the hook to help the underwriters. But the money-raising marathon didn't stop there. On the very same day, the 11th of November 2025, Cogent Biosciences also entered into another underwriting agreement, this time for something called convertible notes. Again, they worked with Jefferies LLC and JP Morgan Securities LLC as representatives for the underwriters. This time, they were issuing and selling $200.0 million worth of what they call convertible senior notes, with a specific interest rate of 1.625% maturing in 2031. These are essentially loans to the company that can be converted into stock under certain conditions. And just like with the stock, they also gave the underwriters an option, this time $30.0 million more in notes, to cover any extra demand. And again, the underwriters exercised this option in full on the 12th of November. The expected net proceeds from this notes offering were around $222.8 million. After those usual underwriting discounts and expenses. These notes also come with their own prospectus supplement, filed with the CC on the 12th of November, detailing all the terms. This convertible notes offering was set to close a little later, on the 18th of November 2025, again subject to the usual closing conditions. And similar to the stock deal, they agreed to indemnify the underwriters for any potential liabilities related to this notes offering. To announce all this on the 11th of November 2025, the company put out a press release letting everyone know they had priced both the stock offering and the convertible notes offering. This press release is also included as an exhibit to this filing. They filed the actual equity underwriting agreement as Exhibit 1.1, and they're incorporating it by reference, meaning you can look at that document for all the full details. And similarly, the convertible notes underwriting agreement is filed as Exhibit 1.2. There is also an Exhibit 5.1, which is an opinion from a law firm, Gibson, Dunn and Crutcher LLP, giving their professional say on the legality of issuing and selling these shares. And as part of that, included in Exhibit 5.1, you'll find Exhibit 23.1, which is the consent from that law firm. And finally, Exhibit 99.1 contains that press release they issued announcing the pricing of these offerings. They also have Exhibit 104, which is just the formatted cover page of this report in a digital format called Inline XBRL. Now, let's talk about what this all means. Cogent Biosciences Incorporated has just raised a substantial amount of capital, around $324 million from the stock sale, and another $222.8 million from the convertible notes, bringing the total to over $500 million. This tells me they either have some very ambitious growth plans that require a lot of funding, or they need to shore up their financial position. What we don't see in this filing are the actual financial statements showing their current revenue, profits, or losses. This is a report about them getting money, not necessarily about their current profitability. However, the fact they are issuing both equity and convertible debt suggests they believe their stock price is attractive right now. But they also want the flexibility that debt offers. Convertible notes can be a good way to raise money because they typically come with lower interest rates than traditional debt, and if the stock price performs well, they can convert into equity at a higher price, benefiting the company. But conversely, if the stock price falters, the company still has to repay the debt and interest. The key risk here is how they will use this massive influx of cash. Will it fuel groundbreaking research and development that leads to successful drug approvals, which is what a biotech company like Cogent Biosciences likely focuses on? Or will it be used to cover operational expenses in a more prolonged development cycle? Without seeing their balance sheet and income statement, it is hard to say for sure, but raising this much money is a significant move that signals a critical phase for the company. They are either betting on future success or trying to avoid an immediate financial crunch. Alright, that is our breakdown of Cogent Biosciences' latest filing. What is your take on these massive capital raises and what they signal for the company's future? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.